I don't even know whether it's around right now. And now going back to index, it went up as high as I think 17 cents. Already within the last 3 weeks, it has gone down 50%. So again, every time you want to invest in a company, you must make sure that you are very sure about the fundamentals about the business. Like say for MedTech, for example, you go, oh, it's gone up so much. But you can again look at the earnings. The earnings are really multiplying, and then you can actually work backwards. At 30s, at say 150 currently, it may be at 10 times earnings. At least there's some earnings to speak of. I cannot see that for companies like Index. Some people are saying that, oh, but if you look at the general environment, it's a lot more conducive than what it was, say, in March, April. I have to agree with that. And that's because of the immense liquidity that's pumped into the system. Just to take a step back, the last few months, I have been, on the US market, I've sort of like misread it because I disrespected the liquidity that was being pumped into the system. And it will continue on. If you hear what Jerome Powell has been saying, it will be the interest rates will be lower for significantly longer. And I do remember that at a time where they said that, where they have like visibility for the next 3 years, because he said the interest rates will just remain there for that period of time. And a lot of people are saying that, hey, if the vaccine does come out and some of them are in already the final stages of clinical trial, that will lend further boost to the market. As I mentioned earlier on, there is going to be persistently low interest rates. It will be unchanged until inflation hits 2%, which again it is going to be quite a while. And one Fed official supported the rate hike in 2022 and foresaw an increase in 2023. That's a good 3 years of low interest rates at that kind of visibility. But of course, with the markets, I am talking about the US markets right now, not so much Singapore, because I think that even though Singapore didn't appreciate together with the likes of Nasdaq and S&P, but when it falls, when the US indices do make a tumble, it will have an impact in Singapore. So some of the key events that you want to look out in the US will be obviously the US elections. Many people are going, oh, who's going to win? Is that going to impact the market? But I think it's the uncertainty that's leading up to the market that will have repercussions. And on election day, let's make sure that there's no major contest or contest of the results, because that could drag. Remember in year 2000, between Al Gore and George Bush, that dragged on. Markets do not like uncertainty. So if there's and if I believe if Donald Trump sees that his numbers are pale in comparison to Joe Biden, I know it's fluctuating right now, but as it goes closer, I think that there's going to be more rhetoric thrown up. And then, of course, the bogeyman will be China. And there will be some, I think that, like I said, the rhetoric will be very, very much directed towards China. And again, this leads to uncertainty. It could be a replay of whatever that is happening right now, or just making things accentuating the current problem with the tech companies. And I think that that could be another catalyst that could possibly hit the tech laden indices. And another one that I feel that people will be surprised I'm talking about is vaccine. That again has boosted the market. The probability or the possibility of a vaccine have boosted the market. But I believe that if the vaccine does come out, it would actually have a negative impact on the market. And you're going, what? Why would that be? Why isn't a vaccine good for the market? For one, I think that expectations have already been very, very much baked into the market. Look at it. I mean, otherwise it wouldn't have flown beyond flown to all-time highs in the US. If anything, we are still facing one of the worst crises in our lifetimes, in our parents' lifetime, and possible. Oh, well, depending on how old you are, it could be your grandparents' lifetime, because it rivals the Great Depression. Many people are going to lose jobs. right? It's going to be very, very painful for many, many businesses. But yet, we are like forgetting all these important parts and just pumping up or just like diving into the stocks. So like I said, the expectations are baked in, and it is because of all these the dire situation that the liquidity is being pumped in, and it is being pumped in indefinitely, and they call it QE infinity, right? Indefinitely. But of course, there's some certain amount that they can spend. But right now, it is just infin in to the investors just infinite. But when a vaccine is found, what are people going to think next? Even though it may not happen so quickly, they're going to go, "Oh, vaccine is found," means that they can start to slow down. The liquidity push. The Fed can start to slow down. And if you look at what has happened over the past decade, the 3, 4 times where the Fed said that, oh, they're going to like move back the interest rates, they're going to slow down the liquidity push, that has almost always led to a knee-jerk reaction with the markets tumbling down. So with a vaccine, to me, I see it very simply. Successful vaccine, it doesn't matter whether it's going to be implemented globally, that is going to take a long time. But investors are going to think, oh no, liquidity is going to start to stop, and therefore markets will tumble. Why don't I just sell first? So this is a case of good news being bad. It's just like back in March, when things were really, really terrible, it was a case of bad news being good because there's going to be a lot of liquidity out in the market. The Fed is backstopping the market. Now, and if the vaccine were to be found, it will be the reverse. So that's something that I believe investors have to look out for. So some final words before I bring in my special guest for a day. Like I said, I continue to be cautious of the market right now. You have to brace for further volatility. You have seen the volatility start to, or at least you can see that the markets, the global markets, especially Nasdaq, have started to be shaky. It hit a high of I think 12,000 plus at the start of the month, and now it's down to just sub 11,000. That's a 10% drop in barely a week and a half. So don't put your eggs all in the tech basket. I know it is very, very tempting. I've got people that sold out everything in March, then regretted, and then they see the tech stock start to rise up, and in recent days, then they start to pump into tech index. Be very, very cautious. You've got to be, and I think that there's really no sin in like holding a little bit more cash during this period of time. I know I said that last month, I said the month before. And you probably will underperform the market. But in times of this uncertainty where valuations are not exactly cheap, I feel that we can just look around. And I know that just now I mentioned about small caps. Many investors have a huge amount or a huge number of like stocks on their portfolio. It is probably a good time to relook at it. Do the painful thing. You may need to chop off some of these counters that really cannot make it on. About 2 months ago, there was one investor that came to me and showed me her portfolio. There were like 50 overstocks out there. Many of them are companies you don't even remember buying. I look at the names of these companies, and many of them I really roughly know when she bought it, because some of these companies, they were just one stock, one month wonders or 1 week wonders. They pop up sometime in May 2015, and then they start to fizzle because people were just trying to push it. There's some placement exercise, there was some potential M&A which didn't happen. But before that, people were trying to push it. And I can see many of these stocks. So I told her, you got to take the hard route. Right now, you just need to bite the bullet, sell these stocks, keep cash, and wait for a better time. Or if there's some alternative investments, alternative stocks that you can look at, this is a good time to really start to revamp your portfolio. I got a little bit worried because she tells me that her group of friends are also in the same position. I used to be from SIAS research, right? I do work with a lot of retail investors, and I do see that this is very, very rampant. So what you can do during crisis like this, and especially we are still in the midst of crisis, but it's a lull period. It's really a good time to relook at your portfolio. If you and for that lady, what I did was a little bit of pro bono work. I actually like revamped her portfolio. I can possibly look at some of yours. I can't look at everybody because I'm doing this as a form of a community outreach. You can maybe look out for I can you can go to my website. You can look for my email address. But only for accredited investors. What I do is I can help you like look through your portfolio and give you a certain pointers out there. Like I want to repeat, I cannot do it for everybody. I mean, if I think that your portfolio is really damn jialat, right? I think it's really my responsibility to come on to tell you, hey, this is maybe some of the things that you can do with your portfolio. And this is especially people with a lot of stocks out there that I think that you can rejig it. There's no better time than now. And if you are looking at stock ideas and or investing note is a great place to look at. I know it's a fantastic community always discussing about stocks. And you can also look around at some of these good defensive plays with potential upside. Today, one of the companies that I've identified that I've worked with and I know fairly well is Starburst. I've known the company for quite a few years right now, shortly after it listed. And it's interesting. Ethan, why don't you just bring Jonathan on? Okay, just a little bit about Starburst. I feel that every one of the, like possibly half of the Singapore population would have already tried one of Jonathan's product. It's just that we don't know about it. Hey, John.
Hi, everyone.
Yeah.
Good afternoon.
I was just trying to explain Starburst business. I was saying that half the population in Singapore would have tried your product before, right? Without knowing it, right? And maybe we can share a little bit more about Starburst. Just a very brief introduction to Starburst.
Actually, we are in a very niche business. We are design and build. We are specialist range designer. Basically, what we do is we design and build the live fire training ranges for the law enforcement and the military. That's where a lot of, as you know, a lot of outdoor training ground has been, government slowly want to take back because due to the land scarce. So what they do is they build the indoor. So when we come the indoor training facilities, it's a bit of challenges. You got to have this facility as real, as live as possible as like the outdoors. At the same time, when you train in the indoor, you tends to have this, accidents happen when the round hit the hard surface, ricochet, and it can kill somebody within the containment. That's why this is very important, especially nowadays. Most of the training facilities are concentrated on the what you call the urban warfare, urban training warfare. That's where we come in. We help the whoever the authorities or the consultant to chip in our technical knowledge, and also we help them to come up certain ideas. How to make the range become a safer area for the trainings.
Okay. I noticed that like since you listed in 2014, right? That was one year where you had was it record profits of $13 million?
Yes, that was in our history.
Then there was some I think you hit into some issues in the Middle East. That was in 2015, 2016, right?
Yes, correct.
Because geographically what we have is Sing as well as Middle East for now.
I should say in the geographically we have the Middle East and this ASEAN. All right.
And ASEAN.
Yeah.
The defense companies always very secretive one. So they just not talk about ASEAN. Yeah. I used to cover ST engineering. So when I go for the meetings, right, every time I go and ask, that time the boss, the CEO was Poon Swan Fu. Everything I ask them, they'll go, it's something that is very general or they cannot comment. So don't worry, I won't give you a hard time.
Sure. Thanks.
Right.
Because
okay.
currently we also expanding our business to in Australia and New Zealand parks.
Okay.
Yeah.
The Australia, does it have anything to do with, you know, the Minister of Defense, Ming Han, was talking about this massive Australian facility that's 10 times the size of Singapore. One of them is Shoalwater Bay, right?
Yes.
Does it have anything to do with that?
Yes, because that is one of the very large training ground where this is for the three forces joint exercise, land, sea, and air. So that training ground, of course, the project have a lot of live fire element inside. So that is part of it is related to Singapore, but we also partnering with Australian local company to big couple of local Australian projects as well.
Actually, how does that work? I mean, when you are overseas, it seems to me like it's a extremely sensitive industry that you're in right there. Of course, not as sensitive as producing firearms and ammunition, right?
Yes.
But it is still sensitive nevertheless. Do you always need to have a local partner when you go overseas? Or are they
Yes.
wary of you because you also do MINDEF work?
Usually we don't co-share the what do you call the design, because each and every country have their own training doctrine. So what they do is when we have a local partner is basically is to meet the local requirements, the labor requirements, or whatever they are ruling, or the company joint venture and all this. But in Australia, usually what we do is we will always work with our partners that is a local, and then they can front the local networking and all this. Then what we do is we purely concentrate on the technical design and supply of the parts and the materials.
Is it similar to what you are doing right now in Singapore? Because Singapore, there's also at the same time they announced this. That was a few years ago, and I believe the project has been delayed. This thing called the Safety City, which is
Yes.
what, $1 billion, a billion, 1.3 billion. I don't know, anything
Yes.
above a billion is like
Yes.
so $1.3 billion.
Yeah. So Safety is basically is just a very small, as compared to the Australian one. This is a smaller projects, but it's a much more digital and technologies emphasis on these facilities. So Safety is one of the big projects locally, and other than MINDEF, there's MHA also start building their new facilities, because those existing facilities is already considered obsolete. So yeah.
For MHA, what kind of facilities are we talking about?
Most of it are like for the law enforcement, for the special forces.
Or for special forces, is it?
All special forces, yes.
So it's like, okay, when we talk about Safety City, I haven't finished that part yet. We are talking about building, like say, HDB flats, like allowing people to simulate fighting in built up areas, is it?
Yes.
During my time, it's called FIBOA. I don't know what they call it right now.
Oh,
FUBOA
they have a lot of
FUBOA, is it? They've got
FIBOA, they call it what they call it they call it fighting in the built up area lah.
it's still the same thing, is it?
The same thing. Yeah.
Last time it used to be very, very sad buildings. I think that those people that nobody want to look they just like leave dilapidated buildings there. But now you are making into life size, exactly like a HDB flat, exactly a cinema. Is it?
Yeah.
Is that?
We simulate whatever local available residential or commercial buildings.
Okay. And within these buildings, what you do is you wrap things around. You wrap these anti-ricochet stuff.
Yeah, we not only wrap. It's not as simple as like wrapping and all this thing. We have to consider the height. We have to consider the distance and the type of weapon they use. They're going to use in this the facilities, and all these are become very challenging, because if you're fighting within a very short, very close range. So that's why we nowadays they call it force on force also, the trainings, and we also have to simulate the gate, the door. So that all this we have to go through a lot of re-engineering in order for them to to make it easy for them to train, and then after one another.
Okay, yeah, because I remember a few years ago you showed me this video of a soldier that was firing within this built-up area and
Yes,
started to ricochet around.
yes,
I thought
yes,
that was
yes. So when the round ricochet, nobody can detect or determine where the round go to. Whoever maybe behind or in front will get killed, or get injured. That's the main considerations, safety and health.
mm,
Mm,
okay. And I think that overriding everything,
mm,
terrorism. I mean, given that I feel a lot is taken
mm,
a step back because many governments are now concentrating on battling the pandemic.
mm.
But I believe that terrorism is still high on the agenda, right?
I think it's still high, but in the past 1 2 months, we have a lot of inquiry from the regional countries, you know, about these facilities and all this. So we are working on it now, and I think terrorism is the issue is never end. It will come back because don't forget that those terrorists uh, hosted by this Iraq and Libya
Mm.
is coming home. Yeah.
Oh, okay.
So that's where I think it become a challenges for the authorities.
Okay.
Mm,
So if you are to look at, the next 1 to 2 years in the short term, like where do you see the greatest growth driver coming in? All these are streaming in, right?
mhm.
I know like for the last 2 to 3 years, there've been a lot of delay in projects.
Yes,
But
yes.
what makes you think that this is going to be the year that, projects are going to come in?
Well,
Oh,
you
by
see,
the way, before you answer that, John, I just want to like alert the crowd, people that are watching in. If you've got any kind of like burning questions, you can go on to the Q&A and start to
mm,
ask either John or myself any kind of questions that you want. For
okay,
me, it's anything general, anything
yeah.
regarding the Singapore market. For John, it's very, very specific to Starburst or the defense industry or anything
Yes.
that I think you are keen to understand about, that area, construction or slash defense, right?
Mm, okay. Okay. Coming back to your question, Terence.
Mm.
So why what we see now is, as you know that we have announced about 50, close to 60 million projects on hand now,
Mm.
right? So these are the jobs that backlog previously. So now the government start rolling out, during the CB times also they roll out this confirmation of these projects. The intention is to catch up the what they have previously uh, delayed. Now it's become a very critical. Likewise, like the Safety City and the Shoalwater Base.
Mm.
As time's moving on, uh, they have a deadline to upgrade their weapons, their training, skill and doctrine. So that's where they are running out of times. That's why they need to quickly roll out all these facility one by one in order to catch up with the weapons that they have upgraded, the training doctrine, and also their new cases of incident happen in overseas. They need to review how they going to train their forces and all this. Yeah, of course, this is they also have to work together with the technology also. They are using a lot of technologies, apparatus to help them to fight the war.
Mm. But you see, like in terms of construction, because you also depend a lot on the foreign workers, right?
Yes.
For your side,
Mm.
how has the recent pandemic affected your workers? Like
Uh,
even though have they like slowly been streaming back to work? Because I see it's very, very selective. Like
mm.
people that are building houses, they're finally getting the people back in the construction workers. First it was the essential guys, then
Yeah.
now I think they're slowly streaming, but it's still a percentage of what it was before.
For our business during the CB,
Mm.
CB is we actually our business is considered essential business.
Mm.
So we still operating on the maintenance part as well. All right.
Mm.
So now I think all my workers are come back to full force.
Mm-hmm.
They no longer start from the CB until now. They never been what do you call it, the quarantine in a place or whatever. So yeah.
So in terms of the orders that you have
Mm.
right now, you said the order book is about
Yeah.
$60 million, right?
Yes.
What was the peak and when was it?
What was the peak?
Yeah.
So I think out of this 60 million, it will stretch over to next year and the subsequent years. But currently we are still building up our we expecting our order book will be going up again. All right, because
Mm-hmm.
there are a couple of facilities that we have been talking about. Now we are in the final stage of negotiating the pricings and all this.
Okay.
Yeah.
So but it is also related to like MINDEF slash MHA.
Are all
Right?
related to the military and law enforcement agency.
Actually, just out of interest, I mean, like you started off as a construction company, right?
No, no.
No.
Actually, yeah.
Yeah.
Actually, all the while we started off, myself and my partner Edward Lim, we started off as a subcontractor to one of the foreign company who are doing this kind of business.
Mm.
Yeah, we are not.
Oh yeah, I do remember you because you were QS. You was
Yes,
yeah,
I
QS in
was I
a
was working
construction company,
as a
right? Before
project
you
surveyor.
started doing this in the 1990s,
Yes, yes,
right?
you're right.
And
Yes.
that was how you got your big break into the defense because it's very, very niche.
Mm-hmm.
And not every company will be able to do that.
Yes. Not say not every company, but in Singapore we do have a competitor, but our
Mm.
competitor is from overseas. All right, although they have offices in Singapore, but we always bump to this company whenever we bid for the jobs. All right, so by
Mm.
looking at our current confirmed order books, those are the jobs that is quite sizable,
Mm.
and they lost it, and then and of course because we are a local home country company, and our prices in terms of pricing and in terms of our design is to be think it's like much more competitive in terms of that.
Mm. Okay. There's actually a question for you.
Mhm.
And David was asking whether you're able to pass the additional cost due to COVID, either from higher compliance, etc., over to your customers.
The authority is talking about it, but we don't know uh, what's the quantum yet, because now they are talking about because the government also and BCA also talking about it, right? And then we are currently waiting for still negotiating with the relevant authorities to see what kind of quantums we can pass on to them.
Hmm.
Yeah.
Okay, because I look at the numbers that you have.
Mm.
Some of it is also been bumped up. The 2.1 million. Some of it is bumped up because of the job support scheme and stuff like that. But then
Yes.
going ahead, you feel that the orders will start to this will be an inflection point where the orders will start to take off.
Yes.
Uh,
Yes.
right.
So if you look at it now, uh, based on the current confirmed order books, is in our history, the first time history that we hit such a high order books.
Hmm.
Yeah.
Congrats.
Yeah. Thank you.
Yeah,
Thank
it's
you.
been
Yeah.
yeah. Like I said, I've known the company for years
Yeah.
by now, and
Mm.
it certainly looks rosier than what it was like a couple of years
Yeah.
ago, and that's despite
The
the
other the
ongoing
other
crisis,
plus
right?
the other plus point was nowadays usually the job come with a long-term maintenance as well. So
Yeah. The maintenance I wanted to talk about also. Yeah.
yeah, the maintenance is the recurring incomes. So like some of the job they come with a 3+3+3, some come with 5+5+5. It all depends on the agency requirements.
Okay. So right now the project versus maintenance, what's the split?
The the we currently we have a confirmed maintenance contract on hand is about
Mm.
7 million. 7
Mm.
million. Of course, with this 60 million order books, our maintenance is about maybe about 2 over million.
Mm.
2 over
Okay.
million. Yeah.
For the new jobs, it'll be
Yeah.
2 million.
Yeah.
So it'll
Yes.
build up on that.
Yes.
Yeah.
Yeah.
So in the
We
short term, the orders, or of course, the new project, the orders will overwhelm
mm,
the maintenance. But
yes.
maintenance being high margin,
Yeah.
it will continue to rise. And what do you think will be a good steady state? Like, is it 30, 70 type of number
For
maintenance?
maintenance,
Yeah.
you mean uh
In terms
base
of revenue split,
revenue split? Revenue split, I think it's 80/20.
80/20. Yeah.
Yeah.
That would be a good split between
Yes.
the project as well as the maintenance
Yeah.
side.
Yeah. Yeah. But it's slowly when we build out our maintenance, order books, then I think the maintenance will be what I always say to people is our break even is about six over millions a year
Mm.
for the holdings expenses. So when we hit maybe about 13 to 40 millions maintenance, I think there's a break even point there.
Mm. Just on the maintenance alone, right?
Yes, yes, yes,
Okay.
yeah.
A couple of other questions. Somebody's asking you about your marketing strategy and what's your competitive advantage in Southeast Asia as well as the Middle East.
Okay, our marketing strategy is usually through word of mouth, because we have been working we working with many so-called consultants or end user. So, and also mustn't forget that the facility we built in Singapore, there are a lot of foreign visitors as well. They
Mm.
came to Singapore, they see it, and they will ask referral, and then the consultant also think that we are quite flexible in terms of design and working together. And our competitive edge over our competitor is because we have a anti-ricochet product called SEAR,
Mm.
SEARLES. So this is our trademark materials that we have the what do you call it, concoction, how to mix the chemical to make it work. So we work with our so-called OEM. So we have this cost is much cheaper, and on top of that, we also have a design team in our in-house.
Mm.
So we sort of like provide a one-stop shop from the design and then fabrication plus the installations. So that's where uh, a lot of end user prefer to have this, because they can look for one person rather than just design done by someone, then material supplied by someone, then installation done by someone. Then whenever there's an issue, who are they going to look for? Yeah.
Mm. Okay, good.
Mm.
Sounds exciting. I hope like all of you have a good idea of what Starburst is about. Very, very niche player in very niche industry. Not many people know or talk about it.
Mm-hmm.
But I think through this sharing, I'm quite sure the people from Investing Note will have a better idea. And hopefully like within the community, there will be some form of discussion. And if there's anything, Ethan can always like bring Jonathan in for a live chat
Yes.
again. Hey, thanks so much, John.
Okay, thanks. Thank you.
Yeah, thank
Yeah.
you.
Okay, bye.
Okay, I'm gonna dive into the questions and answer on the. Okay, somebody's asking me whether the market is filled bubble nowadays. Oh, I guess is it published? If you look at the Singapore market, I don't think it is published because like I mentioned, it hardly moved since the bottom, right? Say from 2233, it went up all the way 20% to 2,800. It has fallen down to 2,500 at this kind of like levels. So it's only like up 11-12%. Valuations not expensive, dividend yield market. But the thing to look out for is because Nasdaq, the likes of Nasdaq, the Dow has like jumped so significantly. Should there be a correction as we and I think that I feel that we are currently in a relatively wobbly market right now. That would have repercussions because we may also possibly fall in sympathy. I know it's not very fair, right? I mean, like likened to what I said earlier on. If it goes up, we don't get to enjoy the upside, but when it comes down, we also go down. But I think that when it comes off, it will go down a lot less significantly compared to Nasdaq. We're really seeing that. I mean, Nasdaq fell, like I said, 10% this month. We have outperformed the Nasdaq so far. Well, loaded question. Singtel, Sembcorp, Keppel Corp. Should investor hold and hope for turnaround, take the loss and move on? Okay, I take it one at a time. Singtel, I think that they are not exactly firing on all cylinders. The the Singapore business have been relatively poor. Overseas, there are certain challenges, though there are a couple of markets that are making a comeback. So they have they are geographically they're very well spread. And I think that should the markets return, this one will be, even though it's a telco, it's supposed to be defensive, it will be sort of like beta. It will start to outperform the rest. It has had a very, very terrible time also because I think it lowered its dividends. And I think that this one you may have to hold for a longer term, but should the recovery come, Singtel will be one of the beneficiaries within the telco space. Sembcorp, I suppose you're talking about Sembcorp Marine because you're putting it together with Keppel Corp. Sembcorp Marine, I think the thing is, recently it's been under a lot of pressure. There are two parts. One was right after the Sembcorp Marine, right after the rights issue, so it come down from 30 cents all the way down to 20 cents. Then recently, because the Sembcorp Industries shareholders also got billions of shares. They've got a lot of shares of Sembcorp Marine. Many of them, it's just an optionality. It's supposedly, they look at it as free shares, even though it's not exactly free, because that number is actually baked into their overall return. So they are out there like shelling out. They are out there selling the stakes in Sembcorp Marine, and that is why it has hit a little bit of a stumbling block. But again, this one is even a longer term story. I mean, if you're talking about recovery, not these 2 years, it looks absolutely bad right now. But the good news, of course, is Temasek is there to backstop it. As the major shareholder right now, singularly the largest and the driving force behind Sembcorp Marine, it will be there for the long term, just like SIA. And I think that some people will have great queries about SIA. And the good thing is that, and I put it on record, that I feel that the Sembcorp Marine and the Keppel Corp merger is closer than we think. I mean, back in 2001, when I was still a very, very young analyst, I remember them talking about it, and they were going through the rigors. It didn't happen. And then what happened? The oil prices just started to skyrocket. And then they decided that it's okay to have two global champions. But right now, yeah, two global champions, but of a rapidly declining market. If anything, that when from point where both of them actually enjoyed 10, 12, $13 billion of orders each. Right now, they're struggling to even get $1 billion collectively. So the market is very bad, but I feel that, there is a possibility of a merger. And when that happens, I think a lot of the costs will be slashed. And hopefully that will be sooner rather than later. Do you think there's currently a rotation for investing industrial REITs to REITs of other sectors? Definitely. I think that during the peak or the peak of the fear back in March, the key subsector of the REITs to go into, the go-to sector was going to be the industrial REITs. Why? Because industrial REITs are supposed to be a lot more defensive compared to, say, the shopping malls or the offices, right? And therefore, there was a flood of activity moving towards the industrial guys. But I think in recent times, people are looking at the industrial portfolio. And they're wondering, is it wise to actually like pump in so much more money into this when the leases of this portfolio is a lot shorter compared to, say, shopping malls, a lot shorter compared to the offices and such. So and the hospitality place. So there is a shift, and also because of the reopening of the country, or I mean reopening of the economy, hospitality, the likes of hospitality, shopping malls and offices are making a comeback. So that there has been a shift out there, and I feel that this shift will continue should the economy start to improve. Oh, there's a few other questions. Hey, John, are you still around? I see some questions for you. John?
Yes.
Okay, there's a question on for you. How do you expect the timing of revenue recognition for the current 60 million order book?
Usually
The question before that was, are you able to share how is revenue recognition policy? Is it progress billing?
Yeah, it's progress billing. Usually what we do is when we confirm the contract, we do the design, we have a certain percentage of recognition. And then when we start upon the design confirm, then we start fabricating. From the fabrication periods, progressively we will send the material to site, and then from there we will get maybe about another 50%. Yeah, then the balance is for the installation. So 10 to 20% for the design is quite normal. All right. And then materials, that's how we recognize. But if you ask me to say that for these 60 millions, how are we going to recognize? It all also depends on the infrastructure contractors, progress, how fast they progress. For us, once our design is confirmed, we will start fabricating, and then we will keep the material in our office, factory, and then whenever the site is ready, then we send to site for installation.
Okay.
Yeah.
All right. Thanks for that, John.
Yeah.
Okay. And another question, do you think there's currently a rotation from investing in US tech stocks to US other stock sectors? Possible. I mean, there has been a rotation, and this is not new. I mean, since April till June, I remember there was also that form of rotation. First, it went to tech, then went to other parts of the recovery place, then it went back to tech. But again, I like to caution that we've got to be extremely careful about investing when amidst the euphoria. You don't want to hit a point where there's a risky moment where suddenly the markets just turn on you, and then you are there scrambling. At first you refuse to admit that this could be the correction or the major correction, and then you hang on there and it starts to fall more and more, 10% to 15 to 30%. That's not a situation that you want to be in. Again, this is not just about looking at tech stocks in the US, but when you look at local context, there are the stocks that I mentioned earlier on, the glove makers, they have done tremendously well, backed by earnings, definitely. But at what cost? Say Top Glove, for example, I was invested, but for a much shorter period. I didn't get to enjoy the entire run, because when you have like 50, 60, 70%, you're happy, right? But then you didn't know that it's going to jump multiple times. But again, if you were to look at the valuations, sure, all the stars are aligned right now. The ASPs, the average selling prices are jumping up, 15, 40, 15, 30%, and it's significant. We're talking about quarter-on-quarter jump. They're locking in orders up to 2 to 3 years. So there has been a tremendous improvement in the numbers, both revenue as well as the bottom line. But if you look at the valuations, the PE for Top Glove, and you think that it's not expensive. Despite the 3 times run, it is still trading at 16 to 17 times PE. And the average for the glove makers are 23 times. So there's argument to be made. Based on 2021 numbers, we still have a decent upside to it. But 2021, remember, is going to be the peak, right? This ain't, if our base case scenario is that this is not going to last forever. So by the time it hits 2022, the numbers will start to dip, right? And if you look at 2022, it could be as high as 35 times, because the numbers could drop by half. And what's going to happen? Then, while you look at 2021, which is very, very certain the numbers are going to come to, it is cheap. But when you look a year ahead, when it normalizes, or at least threatens to normalize, then the valuations are a lot more expensive. These are things that, I'll be careful about, even though the momentum is there, even though I know that the business is very, very strong, but always look at what's the cost, what is the price. Support resistance level for SKI. I don't really do technicals. But I mean I used to think that the 2233 in a bear case scenario that could break through, and I still hold to that, even though like I said the conditions are a lot more conducive right now. And in terms of valuations, really the STI, I mean the Singapore market, it is not expensive, but I would think that you've got to look at some of the first guys to actually run, when there's a dip, and I believe it's really a good time to accumulate on the dips. The banks currently, I know they're not the flavor of the day. In if August they did very well. I think that there's a little bit of profit taking over in September, but in longer time, should it come off, I think that these banks are very, very strong. They should be able to survive or go through this crisis. Another sector that I think is another big cap sector that I think is interesting would be the property guys. I mean, property guys, you look around, there is I mean, amazingly, you look at the numbers for property, it's actually crept back up. And then we'll be scratching our heads going, why are they buying properties right now, given that the job markets are so uncertain? First, I think the interest rates are ultra low, but I would be very, very cautious. I'll tell people, hey, don't just look at the ultra low interest rates and start to tap into the market. Right? We got to think long term. But in the longer term, I am bullish on the property market. And the good news is that many of these property guys are now trading at a big discount. And you don't have to dig deep. We're not even talking about the niche developers. We're not talking about those smallish ones. I'm talking about the likes of CapitaLand, UOL, City Developments, the big three, right? The price to book is at 0.6 times. That's price to book. And you go down to price to RNAV, we're talking about 0.5 times, which I think is very, very palatable. So while I feel that the markets are going to be wobbly, we will take advantage, build our ammunition, and start to look at some counters like that. So I think the hour is there. If there's any kind of like burning questions, I'm more than happy to answer them. You can just like track me down. I'm sure that you have the ways I've got investing note account, and you can, which I haven't opened for a while. I think I should go back. Ethan, I am so sorry. Right?
No worries, no worries.
Okay, I will go into the account. If you got any questions, you can like pop me questions over there, or if you got my email, just email me.
Okay. First of all, thank you, Terence, and thank you, Jonathan, for coming on as our panelists for this live market commentary. So, and thank you everybody for attending this commentary, and I hope that is useful for you guys. And we also hope to see Terence doing more of this webinar, because Terence is pretty busy as well. All right. So we'll keep you guys updated on the next webinar, and let's just end it off here lah. Thank you,
Thanks,
Terence.
Ethan.
Thank you, Jonathan.
Thanks, John.
Thank you, everybody.
Okay, see you.
Bye.
Okay, bye-bye.